Hi everybody and welcome to today's Facebook Live. We're going to be talking to Mark Germain, CEO of Beacon Wealth Management, about the 5 foreseeable factors that could affect your retirement. I'm Tina Powell, business consultant here at Beacon Wealth Management, and before we get started, you know that we just have to have the statement over here. Just to let you know that everything in today's session that we're going to talk about, this is just general in nature. Please, it doesn't replace the type of advice that you would get from working with a certified financial planner such as Mark or a financial planning professional. So again, these are just general guidelines, and we're really happy that you've joined us today. So the reason that we picked out retirement planning, Mark, is because I know that the firm does a lot of advanced planning with clients and that you're asked a whole lot of questions about retirement.
If you think about it, almost everyone is thinking, where am I going with building my wealth? What am I going to do with it when I get there? And a major part of what people work on today is thinking about what's going to happen in retirement. And we're going to talk about some of the key things that are going on and what are the 5 things that really people are most interested in when they start talking about retirement.
And you have been in the industry for...
I can't say how long you've been in. A long time.
So you've been in the industry, and what's also happened is that the retirement has also changed because the nature that you could no longer get that, corporate job with that pension that we don't see. We see the type of retirement assets changing as well, right?
How people provide their retirement is changing dramatically. So there was a point in time where industry would provide you with a pension plan and combine the pension plan with Social Security, and you had enough money to live as you went through the latter years of your life. A number of things are happening. People are living longer, many fewer corporate pension plans.
You even have data on that too.
I'm sorry. Data. Yeah, go ahead. So maybe you want to show the old idea of retirement. We're going to show you the new idea of retirement. This is not. This is retirement version 1.01. Your later years in your life, and you would have a retirement plan and some Social Security, and you'd be happy.
So retirement doesn't look like this.
Doesn't look like that anymore.
Okay, and part of the reason is because, as you were going on to explain...
Yes, people live longer, working longer. I could retire. Well, I'm still working. Time with the family becomes of the essence. We need to have more time with the family. Activities and hobbies. Play golf, love it, and people want to play more. Travel and adventure. The amount of time that people spend traveling today compared to 25 years ago is very significant. And they're creating new challenges. Why? Because they're living longer and they're working longer. Community and relationships, also philanthropy and giving becomes an important part of what people are looking at. So as we look at all of these things, retirement has changed and continues to change.
So I love this screen. Get ready, everybody, because this is the best screen of the deck. So no longer that's the picture. That's the picture of retirement.
It's much more fun. People are enjoying, they're living longer, and they're building community and lifestyle changes. How do we get there? What are the 5 things that people are thinking about, and what are the 5 things that are affecting? And we talked about this pension. And if we look back, okay, and if we go back all the way 25 years ago, 60% of people had company pension plans. We look at today, so we look at 1983, 62%. Let's look at 2016. And we look at 2016, and yes, they have both, but if we look at 2016, 12% have defined benefit plans or company pension plans. When we look at defined contribution in 401k plans, 60%. We put the two, and yes, there's 73% is being funded. But take a look in 1983, how many people had 401k plans and how many people had both. Now, today, when we take a look at both, all right, 26%, 16,
and we're right over here at 2016.
And we're right here at 2016.
And
the number is going down, which means where you're pulling your money from is no longer from the pension plan, that it's coming from other areas. So You want to talk about those 5, or do you want me to get right into them?
Yeah, so we're going to talk about, again, because retirement planning is such an integral part of financial planning, and the reason why there's the discussion of retirement every single time, basically, with most of the clients. Even the younger ones now, we're starting to see savings a lot easier because as you were looking at the data, they no longer have that defined benefit program at work.
They don't have
And here's another thing that we noticed, that our clients are living longer. This was really key, and that's
where you live.
And where they live as well, right?
So we talk to our clients all the time. We have a number of clients that we've helped them kind of focus on moving out of a high tax state like California, New York, and the state that we're talking from right now, New Jersey, very high income tax state, very high estate tax and inheritance tax state. And where you live, you could be living in Texas, you could be living in Florida, you can live in Nevada, and you wouldn't pay any income tax and no estate tax. Now we go to how much you're going to pay in taxes. So where you live and how much you pay in taxes is a very important component, which also, if we go back and we show the lifestyle pictures, where you want to live is going to determine what your lifestyle is going to be like. And when do you take Social Security? There was a point in time when as soon as you could take it, you would take it. We tell most of our people, wait until age 70. Why? Because between age 66 and 70, your benefits go up 8% per year. How many people are making more than 8% per year on their portfolio?
Not many.
Raise your hand.
Yeah, not many.
Okay? Social Security is going to guarantee you 8% more each year if you wait to take it. Well, what's the payback period? So people always ask us, well, how long do I have to live in order to make the same amount of money if I had started taking it at 66? Somewhere between 9.5 and 12 years, depending on what you're getting in Social Security and how much tax you pay.
Right, and that Social Security also is adjusted for inflation as well. So not only can working with a financial advisor help you to determine when that kind of break-even point is, but also too, really looking at that investment through the eyes of an almost inflation protection, right?
The key is Social Security changed dramatically in the last couple of years, in that you used to have a lot of other options with your Social Security, that your spouse could start taking part of your Social Security, and then you could let it build until age 70 and then increase the number. All of that's gone away.
So I know that you want to get to the next point, and when you sit down and you're working with a client for the first time, and I know that you're creating that income statement or that balance sheet, and then you're also creating that cash flow, this is the question that you ask, right? How much have you saved?
How much have you saved, and how do you save it? Everyone today, or just about everyone today, has the opportunity to have a 401k plan, which means the government is starting to pay part of your retirement plan because you get a tax deduction. You pay no taxes on the amount that you're putting in your 401k plan. So how much have you saved? And most importantly, in order to live the lifestyle that you expect, how much do you have to save each year to get there?
And then the last, of course, that you've amassed or that you're saving, right?
We should talk about the medical expenses are probably the least predicted expense in most people's lives. Medical expenses go up. Your medical plan goes away. Medicare covers a limited amount, and then you're going to be dipping into your pocket. And we tell people that you're probably going to spend in retirement $250,000 or more.
That's a huge number.
On your medical expenses. And we deal with these issues on a day-to-day basis. So we had the pleasure of having dinner with a client, and we asked, what are the things that really keep you up at night? And wondering whether they're going to have enough money to get through the retirement years. When should they be taking their RMDs? When should I be taking my Social Security? And those become the key issues. And how are we going to afford all of this medical stuff that if I become 85 years old and all of a sudden I have all of these medical expenses, how am I going to afford that? And at the beginning of the process, we met with a client this week that's 59 years old, has plenty of money, but had done no plan as to how they're going to retire, and he wants to retire in a year.
So speaking of plans, I know that that's the strength of Beacon, and what you spend a lot of your time doing, and what the team spends a lot of time doing is creating that advanced plans.
Yep.
I think that the next slide we have just some general, again, recommendations for clients or for the people out there. Maybe they're not working with an advisor, but here are the instructions, or here's at least a guideline of the things that they should be doing with their advisors.
Right. So think of those 5 factors, and then think of your own objective. It doesn't matter what your cousin wants to do or your neighbor wants to do. What is your objective? Your neighbor wants to move to the west side of Florida. You don't want to move to Florida, you'd rather be in North Carolina near the Smoky Mountains. What is your objective? So that's the number one thing you have to figure out.
So what is your ultimate goal?
Right. Next, take an account of where you are. What's your personal balance sheet or your personal net worth sheet look like? And what do you own? And what do you owe, if anything? And then determine what is going to be the process and what of those assets are going to change. Are you going to sell that house and invest the difference and buy a cheaper house somewhere else? Are you going to rent instead of buy? A big option today that people need to give consideration to.
Now, I know this next point that you're going to be talking about, again, is one of the key tenets to the advanced planning here that you do at Beacon, but also too, would you talk a little bit about also the software and the technology, because making these assumptions and creating these different situations on paper is very complicated. You've talked about a lot of different things. When I'm going to take Social Security, what my health looks like, all of those things.
Let's kind of start very quickly at the beginning, because if you think about it, the personal cash flow statement, how much money comes in,
which is number 3, right?
It's number 3. How much money comes in and what goes out. What's left over actually creates your balance sheet. In other words, a balance sheet is nothing more than an accumulation of all of the years of cash flow. So cash flow becomes the number one planning exercise that we do for every single person coming through the Beacon financial planning process. I don't care if you're 25 years old or 55 years old. We need to understand what your personal cash flow looks like to determine if you can meet the objectives that you're focused on your balance sheet for the future.
That's really great.
Yep.
And to see it on paper like that is...
You brought up a really important item. One, you said about paper. The second thing you said is, well, what if things change? So we tell all of our advisors, and we train our advisors to understand that the cash flow is your baseline. This is where I am at this moment. What if something changed? What if I got a different job? What if I saved more? What if I went on my husband's medical plan instead of trying to have 2 medical plans? All of those issues we can put into, and that's why our software is so important, because we start with a baseline, and if we want to test an assumption, we call them sensitivities. So you change an assumption, something changes, we can run it through and instantly say, this is what happens to your cash flow.
And so your clients are able to look at the financial impact of one decision over another on paper before they actually have to make that decision.
Wow, that's a really important point, and hadn't thought of it quite in the same way, is that, yes, you get to see the effect ahead of time before you make the decision. Everybody can look from the back seat after it's happened and said, oh, I should have done this. Now we can show you ahead of time and help you make the decisions of what you should be doing. Asset allocation, where you're invested, how much in each asset category is critical, because it's going to affect the return as well as the risk, and understanding the asset allocation, does the risk match what investment risk you're willing to take? You can take a lot of risk, make a lot of money, but never sleep at night. Or you can pare your portfolio back, realize you must save a little bit more because you're going to make a little bit less money. Defining the exact allocation is part of the planning process that we go through, and analyzing what are you willing to do in order to get to your objective.
And I think what I've seen, the work that you've done here with clients, is that some clients might not have enough fixed income. They might have not you might be creating a portfolio to structure that cash flow to make it even stronger because they have certain expenses that they need to meet, but yet those investments could be giving off a little bit of cash, right?
We kind of use the 59-year-old who wants to retire at 60. Can't take Social Security yet.
Mm-hmm.
We don't want him to take his IRA distributions because they build up tax-free. We don't want him to take his pension distributions. So we're looking at his investment portfolio. Does he want to sell his house, invest the proceeds from there, rent something, move to a different part of the country so his tax picture is less, and maybe change the asset allocation so what he's generating is tax-free income, so he needs to make less money to meet the objective of what he has.
Which is what you said, the
which
know
is
your
part of the
goal,
recommendation.
which is the most important. So in a way, you're reverse engineering back to that ultimate goal
That's
for
correct.
that client.
Yep.
Okay. And then I think your last point, because this is very complex analysis.
Well, someone said to me today that is becoming a planner, it's not rocket science. And I said, well, technically, everything works off of a formulation, and if you understand the formula, you could do the calculations. But we see 99.5% of the population will never do their own calculation, nor will they ever follow the plan that would normally come out of that type of analysis. So, for advanced financial planning, you have to have a detailed plan analysis. What is my baseline? What is it going to be when I start collecting these? And when do I start taking my retirement benefits? And what's the tax impact when I start to do that? So Beacon offers advanced retirement planning. We charge a fee. We're not a commission brokerage firm. Contact us, and Tina asked us, would we give a complimentary consultation for people to understand what's going on in the retirement plan? And yes, we would give a 30-minute complimentary. It's a virtual meeting. We do it via Zoom. Or a telephone conversation. So those people who are technology challenged, we can actually do a telephone conversation, give us some information, no obligation. We don't expect that, if we give you some advice, you have to do something with this. That's not what's happening. We call it complimentary, and that means it's without cost. So you can get in touch with Lynette at bwmllc.com or Reshmi, Reshmee, at bwmllc.com. Either one of them can set up the time to get that done for you.
Well, Mark, thank you today, because I always love talking and learning from you, especially as it relates to retirement, and I'm planning my own retirement many years from now. But all of this is really great information, and thank you for offering that complimentary consultation for that advanced planning. And you heard it here. You can do that via Zoom, or you can do that via telephone. Thanks everybody for joining us for today's Facebook Live. We will see you next month. Everybody have a great and a safe Memorial Day. Thank you.